Hello, 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 everyone. Happy, wonderful Wednesday. It probably won't be washout Wednesday, but after yesterday, you never know. You never know. Good morning, Sterling. Good morning, Jacob. Good morning, Patrick. Sterling putting the news in. See, cash and carry. There's a risk interest rates might have to go higher, but it's hard to know. What are these people paid for? This is why. Get rid of the friggin' Fed and come up with just a rule that everybody knows what the rule is. Come up. We can take some inputs. We'll publish the rule. And I'm not saying should be the Taylor rule or anything, but that's just an example. All right. So when this exceeds this, we're raising the rates are naturally getting raised. When it exceeds this, they're falling. They don't know. They don't know. So you're trying to manage how many $1 trillion economy, and you don't know. You're guessing. We don't know. We'll pause. We'll hike. We'll do whatever. We don't know. There we go. Can we just shut it down and save that money at least? Good morning, Eric. So, good morning, Anissa. See it. What? Okay. This is in certain segments. Good morning, Alan. Thanks for the news. Sterling for president. It'd be better than what we have now. Way better. Hey, options 22. Sterling, are you going to take the role as president? Boy, all right, we had the mortgage stuff out earlier. Durable goods, which was a beat now, but the last month revised a lot lower. So this is some mixed news on durable goods. EIA numbers coming out, and crude is trying to at least retest the most recent highs. So we'll see what those EIA numbers do. Remember. Thursday and Friday. Thursday, we got the GDP info and jobless claims, but Friday, we also have the PCE info from August and final consumer sentiment numbers and inflation. So Thursday and Friday are very important this week. I'm keeping that in mind with today's price action. All right. Well, things are a little stronger going into the close, except Costco, which we know reported yesterday afternoon, which was a beat, but down. Also, keep an eye out. There is a massive, not anywhere close to triggering yet, but a massive weekly double top on Costco. So even if you don't trade the stocks, keep an eye on that, because if that could trigger, it could be a major start pullback in the consumer. And, it could get interesting. Other than that, oil, energy still very strong. Not a lot of red besides Costco, a little with Walmart. What's Next Era Energy down? Oh boy. Oh boy, Next Era. It's all over. So that's where we stand. We should do everything's positive. Everything's technically positive, even consumer defensive. Fed watch still, even after Neil Kashkari's little CNN interview. Let's see. Nothing's really changing. It's still the pause through June. Nothing's really climbing yet for November and December. Actually, the rate hikes in November keep falling lower. Fear and greed. Fear and greed, almost to extreme fear. We're at the verge of extreme fear. So that means Coco's going to pop in and say, buy the dip. Micron after the close today. Are we done yet? Let's see. Hey, Martinez. Always checking morning. Hey, Heinrich. Thank you for checking in. Beautiful potential double top. Is it? Let's look at a couple things real quick. Here's what I'm just not going to be on this long time, but there's the double top in Costco. And this was a little mini. It's one of those doubles within a double, but that's fine because it's still completely valid on the weekly. But just to keep an eye on that, especially for consumer sentiment and where they could be pulling back. Sterling brought up the 10-year. I didn't think this qualified. Let me double check. I didn't think it qualified for using the double targets. Now you break down through four. All right, this is a good point. How people wonder, well, how do I structure this when something is here? This is a very key inflection point, and a lot of people will still look at it as a double. I just won't use the double targets. What I will be watching for are two things. This is instructive. This is good. I will be watching right there. Now, normally, if this was a little farther off from the 62.5, that would be a first key area, but that's the first area I'm watching for follow through. And then I will use the harmonics, especially the 87.5, to possibly take some profits and lower a stop. And the target for me is the end of the clear path move, if there is a clear path move. And the end of the clear path move is technically this low close. 4.41, and I just go to 4.42. So on a breakdown, that's how I would structure this when it doesn't qualify as a double, but this is a very key inflection point. And if there's even pullback, and that could be front run, and then it follows through with a close below there, then that is also potentially a valid thing, but I need something intraday to show me that. But that's how I structure that little thing when it potentially when it does not qualify. And you can use that, you can study and research that, but that's what I do. Hope that helps. Sterling usually pulls 50% profits on the first target, 25 has 20, and trail stop on the remaining 25. Thoughts on system? That's fine. You just have to use a tighter initial stop, but that's completely fine. That's why I have my way I do things, and people can fine tune it to their nature. And that's the point of this channel. It's to give people something to work with, and then they can do it. I mean, some people like to take profits earlier. Some people like to use wider stops and let it run. I'm just giving some key levels that people should look for. That I have no problem with you trading them like that, Sterling. I want people to take information and other stuff they've learned too and make it their own and put into their trading plan, as obviously Sterling knows his trade strategy for trading doubles. All right, he's made it his own. He's used information, because that's when you really become your own trader. You can take information that valid people are teaching, and you can say, hey, I like these concepts, I don't like this, I really like this, but I'm going to trade it this way. I've tested out, this is what works for me psychologically. Because if something doesn't work for you psychologally, you're not going to be successful trading it. Even if it gives you a slightly higher percentage, if people have trouble holding on to things longer psychologically, you're better to fine-tune your reward, risk, and stops and profit targets to what suits your psychology. That's going to make you more successful. Don't just try to duplicate what somebody else does. Take key things like, I hope people can use some concept of doubles and harmonics and like the 62.5 and 87.5 stuff, and make it their own. Make it your own. So that was my whole goal, really, with this channel, is to help people learn to make things their own, and then they can move it forward and become successful and be in this, whether it be a side thing, whether it just be investing for the long run, whether it becoming a full-time trader eventually. You know what? That's for everybody to determine for themselves, and just trying to relay key information. All right, remember we were watching that 200 area. If those doubles did not trigger yesterday, which they did not, remember we had a little potential double and just collapsed. We collapsed, and then collapsed yesterday afternoon. There was some pretty significant momentum bars, then a little pausing bar at the European close, and then a follow through into the US close, and then a bounce overnight. So just look at the technical damage. Now I adjusted the channel a bit, the flagging channel, and you can see the flag on the bigger thing. But I would be shocked if we, even with the end of year rally, if we take out these highs. Now, to reiterate, if it does get especially a weekly close above the highs from the last week of August, then the tune will change. Okay, but you see here, there's a lot to get through now, and this was pretty negative. What does it look like so far for going into September? Remember, September ends on Saturday, so the last day of September trading. Also keep in mind, Friday is the last trading day in September, and this is quarter end also. So you're going to get quarter end window dressing. So we could see some interesting moves over the next couple days. Be prepared for that. But on a monthly basis, so far, September down 5%. Remember, what's the average? Now, this can change going into the last couple of days, but what's the average? If you watch the last podcast I did, Futures Ed podcast I did with Bob, and we put up the numbers for September, the average on a negative month was like, what, -4? So this is not out of line. That's why we put that up. That's why I mentioned that. That's why I showed you that research. So, today, by the way, another little trick that I like on these wide range bars. Here's another. I'm just going to teach a couple things today, and then we'll go over a couple key levels. Sometimes that's when I have a wide range bar and I'm watching for a bounce. I really like to use the wide range bar harmonics. Okay, so. And whether you go from this point to right, generally I just use the wide range bar, and I'll put the harmonics because they really tend to work. So you see already here, little pause at that 25, little pause at the 37.5. We start breaking above this at the open. Look at where the 50 is, and we had some selling pressure. Buying pressure, broke through it. So now I have a target on any bullish move. We start getting above this 43.35 with some follow through internals, 44.43, 44.44. Then look at the next target. And I didn't even see how this would look before I just said, hey, this is how I'm going to look at stuff in the open because this is what I do. 43.53, look at the breakdown zone from the candle bodies. And then look at the 75. Boom. Resistance. See how nicely that works? And not all the time. It's not going to be that nice all the time. This happens to just be a really nice one, but it gives me really nice target areas. Then I can also fine tune it using the shorter term harmonics. See, I can go, okay. All right, like stop raise 43.40, target area right in here. Look at that next harmonic lining up with the 50 and the declining 50 on the 1 hour. So that's how you can structure a little if you're more geared towards intraday trading. All right, so that's how I'm using the levels. The upside, now look to the downside. 43.25 roughly is what was been tested this morning. And hell, look at this buying pressure just in front of it. Look at that key level with this key low, 43.25 area. Start breaking down there. My target's 43.15. And this is a little mini double too, potentially. Little sloppy there. I just used the 43.15. So hope that helps out. Now, remember, you start getting above that 62.5, and it does still hold up on wide range. Only do this on very wide range bars. But what would be the next targets? I'd be using that 87.5 to the highs of this area, the open to the high of the prior bar, which is coming in with the daily rotation zone. So if we can continue to rally over the next couple days, that will be my overall targets. And that doesn't even get us back to the major breakdown zone. Now, we break down. This is also the first target area of this sloppy head and shoulders hit. The 200 hit, if we break through there, the next major target is 42.36. I'm going to wait to see also if we get a pausing bar here, I'll put on harmonics. But there we go. NASDAQ, you can do the same thing with the wide range bar. The other key target area just based off the daily is about this 14.850 area. To the downside, if we took out yesterday's lows, really looking at the first target, the first target area. Why is that one? Give me this one. The first target, my first major target area would be then 14.540 at the bottom of the flagging channel and the next harmonic. To the upside, the major over the next couple days is this 14,950. Do I ever use fib extension as designed for patterns that do not qualify for doubles tools? Fib extension. What you with the harmonics? With my harmonics, yeah, I don't use the fib numbers. I will use the 12 and 25. So I will use the 12 and the 25 extension properties. Yes, I will. I'm just showing you how you can research some of the stuff and, again, make it your own. Same thing. One nice wide range bar in the Dow. This is another perfect example of where you could use the harmonics. The overall key, if it can't sustain a rally over the next couple days, is about 34,250 to 34,300 with the declining daily rotation zone. We're right at the bottom of the channel right now. If we were to take out yesterday's lows, the next numbers I'm using, these harmonics, let me show you which ones I'm using. I'm using them from the high at the end of August to this pausing bar, even though it's only a potential pausing bar. It's a pausing bar on the 4 hour. But that's the, you can see the 4 hour high there to this 4 hour low there. That's giving me 33.6 and 33.4 roughly. Just wanted to clarify what levels I'm using. Russell, very key reversal against the key support yesterday on a rally in the Russell. 1804 to 1805 is the target. We start dropping below 1777. Next target is 1760 to complete the next 87.5. The VIX, which we had a potential double in, which obviously never triggered, now is just this slope. I'm watching this little trend line. We start breaking below that. I'm focusing on 1720 over the next couple days as a very key VIX level. Other than that, if we do turn into start pulling back this morning, I'm looking at yesterday's VIX close. Yesterday's VIX close, which was 1893. The DAX trying to find now a little bottom also. And the DAX, I'm looking at the 4 hour rotation zone. If we start breaking above 15,435, I'll watch. There's a gap left behind and a key gap open to about 15,510, and then the close to 15,566 are the targets I am looking for to the upside. Notes. The notes, which this would look like a double. We already went through this on the yield, which the notes are inverse. But if we look at this, and I'm not going to harp on this again. Now, if you're using, look where the first target lines up, right at the end of the clear path move. So that's really the target. I'm not going to use the double targets because they don't qualify, but look where the target is. And you can also do this with the retracements. Okay, so look at the reactions here. Can you see here? Look at this, 62.5, spike to it, reversal. Spike to it, reversal. Guess what I'm watching for a close on? 108.17. Then that's very key. So not only the double that does not qualify as a double, but people still look at a double. I'm just watching the 62.5, which is roughly the same level as that could trigger the not double, but there you go. You don't have to be overly complex. You have to be consistent and learn some things that do work. The 10-year, we already covered that. Thank you again, Sterling. The 10-2 might have a little pause or pullback here unless we start accelerating to the downside. But really, once this breaks above that minus 38 basis points, watch out. Dollar, still just, the dollar is relentless. And I can't even look, there's no pausing bar here yet. So on any pullback, 105.60 is the 105.55 is the first target. The next major target area, even after a pause or a pullback, is this 106.90, the 50% retracement, as I've talked about. Crude, you can watch this. I don't know if it's going to remain valid. It's really sloppy with this double mess in here. Could be interesting for some pullbacks. But on the little breakout today, I'm keeping an eye on this little this little 93.50 area. You start getting above here too. I'm going to see how it's reacting. This is a key, very major prior high from last November. And we break above that. My next key target is roughly about 94.50. The only thing from a trailing basis now is if we break below. We already broke out of this little pullback pattern, rotating up strongly. So from a trailing perspective, that's a new key level I will be watching. Gold breaking the new lows, not able to hold it. Not able to hold any. Come on. There we go. I hate that that's there. Now, again, that 1882 is very key in gold. The Magnus or the Magic 5, whatever, did not technically trigger the double, missed by a few cents. So the level's still holding firm. The level's still barely holding, watching for a little bounce play in there with some of these mega caps. The yen in major intervention territory, but nothing yet. Euro got blistered yesterday, coming into very key support. I'm watching for some kind of little possible bounce pattern before the next rollover play. Pound, same thing, but these are going to be very aggressive bounce plays and then looking for rollover plays. Bitcoin still caught in consolidation. Spiders and the Qs. Spiders, which obviously the double did not trigger yesterday. The key levels in the spiders right now today, if we roll over, would be yesterday's close at 425.88, then the low 425, and then below that 420 roughly. To the upside, again, short term, wide range harmonic bars. Other than that, the key levels separate from that, you got about 429.20. Then we're looking at the next major level is 432. The Qs, obviously the double did not trigger from yesterday. The Qs, which now, what has happened here? We actually yesterday triggered the daily double top. That does not mean we have to follow through right away. But what does that mean is more aggressively watching for the rollover plays on any bounces. So, up at 355.50 this morning on a rollover 354.21, then the low 353.21, and then we still have the prior 62.5 at 350.80, and then 346.40. All right. On a continued up move over the next couple days would be to this closing gap. The closing this gap to Monday, which is 359.61. And then your pretty significant resistance right about 361 to 361.30. Hey, Christoph. Let's take a look at XLK. XLK, yep, there we go. XLK. Let's see how this week closes. It closed with the daily, which is completely valid. I want to also see how the week closes. Would not be surprised to see something going to bounce it here and then a rollover play. So from a positioning standpoint, I'd be a little patient from risk reward from my perspective. I wouldn't be counting on a super bounce, but I'd be counting on watching for a bounce. So it might not trigger this week, but it's triggered on the daily. It might not trigger on the weekly. But this is a completely valid pattern. Clear path go into the first target. Advanced clear path go into the second target. So yeah, that's going to be a beautiful setup. Again, no guarantees on any setups, but that is a beautiful, completely valid setup. Thank you, Christoph. XLY2, thank you for jumping in with that, Christoph. XLY, there's your consumer discretionary. Remember, so we could see the consumer starting to roll over a bit. This triggered with this confirmed it with the reversal bar. This triggered it with yesterday's close on a daily. So same thing. Let's see if it also triggers on a weekly. But this is a clear path move on the weekly down to almost the final target. Two very valid patterns right there. Look at CM1 that hasn't visited this area since 2007. Do the supports or created now have any relevance? Yes, they do. This has major relevance. We're actually at a major yield also levels. This is major topping yield levels. You're welcome, Anissa. Real quick to Tesla, then I got to look. Key levels still the 237.34. Remember, delivery numbers will be coming, possibly even coming out Sunday or Monday. Don't know what they're scheduling. Paying attention to yesterday's high, 249.55 on any rally, and then above that 254. Nvidia still after a bounce, be watching for a rollover play. Couple other things just from Apple, low close since back in May. Yeah, we'll see bounces, but I'm really focusing on the rollover in Apple now, going down to the 200 after the next bounce and rollover play. The 200 is going to be my magnet area. With that, let's just see how the market's open. Let's just take a quick look in a little horizontal channel. So I have already outlined the levels that I'll be looking at, but right now it's either the horizontal breakout or breakdown play from a short-term perspective going in the open. Thank you, everyone, for tuning in. I will be back for GDP Thursday and Unemployment Thursday. Hope everyone has a fantastic trading week. Bye for now.